Good morning, everyone, and welcome to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. So it's a knowledge breakfast we are having. And today's topic is insight into SS-3 and dividend. And today our presenter is Vedant Patel, manager Mehta and Mehta. Today's our panelist is Ms. Dimple Hasija, AVP Company Secretary. She is a company secretary with 12 years of extensive experience in corporate and legal affairs and providing professional services, implementing compliance, management tools, conducting various audits for clients across a wide range of industries and jurisdictions, proven expertise in navigating complex legal landscape and ensuring regulatory compliance while delivering tailored solutions to meet unique needs of each client, adept at managing corporate governance, regulatory reporting, and legal documentation with a strong focus on maintaining the highest standard of integrity and profession. She is Assistant Vice President, COSEC Services, Apex Fund Services, LLP. Welcome, Ms. Dimple Hasija. Thanks for your time in today's interesting topic of dividend and SS-3.
Thank you, Deepti ma'am, for the invite. I think dividend is the topic we are discussing about secretarial standards today, which is still recommendatory by the institute, but as a good corporate governance practice, we are suggested to go through it and adhere to it in the spirit. And it's going to be interesting while we cover the entire secretarial standards today. Vedant will be taking us through the presentation, and we will be also discussing the case laws, some of the case laws, and also Companies Act and the taxation aspects. So looking forward to it, we'll be contributing. Thanks for the invitation once again.
Thank you. Thank you, Ms. Dimple, for your words. So as usual, we have our moderator, Mr. Balak. He, as everyone knows, company secretary with 4 decades of experience, worked with Foseco India, regular speaker, writer at various forums on various topics, and all recent decided cases. He is the person anyone can bank on. Welcome, Mr. Bala.
Thank you.
With us, Mr. our own Sudhakar Saratula, Chief Consultant Mehta and Mehta, one of our prominent personality, member of Chartered Accountant, member of ICSI, Secretary of the Institute of Chartered Secretary and Administrator UK, worked as a Vice President, Corporate Secretarial Department for Reliance Industries for 17 years. Welcome, Mr. Sudhakar. Friends, his passion you can understand. He is at US and it's almost late evening and it's going to be night by the time we close this webinar. And it's very chilled atmosphere and still he's attending this webinar to meet all of us from US. Welcome, Sudhakar. Thanks. So, friends, so today's topic is SS-3 and dividend. As Ms. Dimple said, it is recommendatory SS-3. But, you know, dividend looks simple but very complex. Very interesting because and important because it involves finance. And everyone wants money fast. Everyone wants to see the taxation aspect. And also various queries on that regard because the CS department thinks AGM is over, all disclosures done, such a huge task, and then dividend starts. And where prominently one question is asked about separate account for dividend. Within given 5 days, not days, and all that questions. Still, people keep on asking. So there will be various questions on that part and other part of that. So interestingly, we have also, as usual, we have mentioned now we are covering accounting and taxation aspect of each topic because we strongly believe that we as a CS profession should also know accounting and taxation aspect of all our relevant topics. So with us, Mr. Akshar Patel, another consultant of Mehta and Mehta is there, who has worked on the presentation, which is covered in the presentation. Welcome, Akshar. He will be answering all the questions as and when comes. So over to Ms. Dimple has already introduced the topic. If Dimple, you want to say a few words, and after Mr. Sudhakar and then Mr. Bala, and then we can start the presentation. Ms. Dimple, you would like to say a few words on the topic?
Sure, ma'am. So, dividend SS-3, as we already mentioned, is recommendatory in nature. And there are questions around opening of bank account, and we still, particularly for dividend, the time period for opening of bank account, then the reimbursement of dividend to the shareholders, all that requires a lot of pre-planning. So you'll also be talking about some practical things like what are the days over there which need to be are not included. Even Saturdays, Sundays get counted in those 5 days of opening of bank account. So other than that, yes, this secretarial standard would be not applicable to government companies, then it would be not applicable to company limited by guarantee, not having share capital. That's about the scope of secretarial standards. And other than the other 10 parts of the secretarial standards, I think as and when we move, I will be adding, ma'am. That's it from my side.
Over to Sudhakar.
Thank you, Dimple. Over to Sudhakar.
Thank you, Deepti. See, as we all know that dividend is an onerous responsibility entrusted upon the board of directors. The moment the shareholder invests money in the company, he always expects, and rightly so also, that he wants some kind of a return on his investment. Now the question comes, how much dividend is to be declared? Whether the entire profits, whatever the company has earned, that can be declared as dividend or dividend of some amount, and then they have to keep it something in the reserves. In the good olden days, under the old act, we used to have a mandatory requirement of transferring the dividend, some amount of profits while declaring the dividend to the reserves, which has been removed under the Companies Act 2013. But having said that, one thing the directors have to remember is that dividend is going to be, unlike your interest on debentures, it is not going to be over the moment the debentures are redeemed. You don't need to pay the interest on that. Dividend is a very costly affair because once you declare a dividend, say for example 10%, 15%, 20% for whatever it may be, you cannot reduce that. So legally it is tenable. But what will happen is the shareholders will get upset the moment you reduce the dividend. So always the expectations are that the dividend is to be increased. So while recommending the dividend or while declaring the interim dividend, the board has to ensure what sort of the funds requirement it is going to have, how much is the funds to be plowed back into the operations. That's why, in fact, the top 1,000 listed companies, as per the market cap, they have to have a dividend policy also, so that there will be a clarity as far as the investors are concerned. The second aspect of this thing is about the interim dividend. Again, under the old act, whether it is to be confirmed or to be approved or to be ratified by the shareholders. That time, this question, some people, used to be two schools of thoughts. One school of thought was, yes, it needs to be, yes, it needs to be ratified. And another school of thought is it need not be ratified, because once you declare the dividend and distribute that, and tomorrow if you go with the thought of that, it is to be ratified by the shareholders. And if they don't ratify, you cannot retrieve the dividend back from the shareholders. So there used to be like that. But with the Companies Amendment Act 2017, now the board is having the power to declare the interim dividend. So it is very clear now that interim dividend need not be ratified or approved or confirmed by the shareholders. Earlier also, we used to have another question, contentious issue, I can say that, whether the interim dividend is a debt or not. Now, after Companies Amendment Act 2017, since the board has been empowered to declare an interim dividend, for all purposes, it is a dividend and it is going to be a debt. Similarly, that in case there is a default of in the repayment of fixed deposit or interest thereon, the dividend is not to be declared by the company unless until the same is made proper, that defect has been rectified. If you see in SS-3, we went further because there are certain aspects in SS-3 which have gone slightly beyond the Companies Act 2013 because of the good governance point of view. For strange reasons, though the Act says that when there is a default in repayment of fixed deposit and interest thereon, a board cannot declare dividend unless until the same is made good. But it is silent as far as the redemption of debentures are concerned, the payment of interest on debentures are concerned. Similarly, redemption of preference shares or the payment of dividend on that. So, and similarly, if you declare the dividend and you don't pay the dividend, distribute the dividend, till you can declare dividend for the next financial year. These are all some strange reasons that Act is not prohibiting it, but SS-3 made a provision for that. Under these circumstances also, the board is not to declare the dividend. Finally, I would like to say before I give a pause to my comments that the board has to ensure that dividend, once it is declared, if it is not distributed or any kind of non-compliance with that, it is going to be a non-compoundable offense because there is a 2 years of imprisonment and 1,000 rupees per day of continuous default is going to be there. So it is a non-compoundable offense. So the board has to be very careful while declaring the dividend and has to ensure that distribution of dividend has to take place as per the legal provisions. So I give a pause here, and while during our discussion, I will make further comments where it is so required. Thank you.
Thank you, Sudhakar. Mr. Bala, few words, and then we will start the presentation, please.
Good morning to all of you. I have a great pleasure in welcoming you all on my own behalf and also on behalf of Mehta. As our panelists said, this is a very, very important topic. Although SS-3 set as a voluntary, not mandatory, but nevertheless, SS-3 is actually nothing but complementing the provisions of the Companies Act, and as well as where certain nitty-gritties which are not very clear, which are not explicitly understood in the company's provision, is well explained not only in the SS-3 but also in the guidance. At this stage, I must actually congratulate all the SSB board members. Sudhakar is also there and Dipti is also there. All these people put their excellent brain in bringing out these excellent documents, which is actually guiding a great guidance to the people. That is number one. Congratulations to both of you, but congratulations to the other people as well. And another thing is that when we are talking about the dividend, the important point is, as Sudhakar puts it, shareholders are expecting the return. That means the starting point itself, do you have the adequate cash? That is which is required. Because the moment declare the dividend within 5 days, remember, not within 5 working days. Irrespective of holidays, it is only 5 days. So money is virtually to be transferred to a separate bank account, the entire amount of the dividend which is payable. That is one thing. So that makes the difference how much a dividend is to be declared by the companies who are having enough cash, not having a cash, even when the company is having a profit. That is number one. Number two is, again, the declaration of dividend is not only a prerogative of the companies which are making a profit alone. Even the profit not made, loss-making companies, or even inadequacy of the profit is made, they can also declare the dividend, but subject to certain conditions which they have to fulfill. As Sudhakar puts it, in 1956 Act, there was compulsorily money used to be transferred to the reserve. And there are good old days when the companies were very conservative. They used to give a small amount of the dividend and they will put left and right everything to the general reserve. When you actually transfer the money to the general reserve, there is no problem. When you want to transfer the back from the general reserve money, then there are a lot of conditions applies. What circumstances you can draw the money, when you can transfer the money, how much you.
Mr. Bala, we lost you.
Second thing is again interim dividend and the final dividend. Although we say interim dividend, if you go by the definition, dividend include interim dividend also. That is very clearly there. Although interim dividend is actually declared and paid by the board of directors, but nevertheless, it calls for actually a confirmation from the shareholders at the end of the year and during the AGM when they are actually declaring as recommended by the board the final dividend. That is important because in practically, if you see every balance sheet, they will normally say so much interim dividend has been paid, which is making the total dividend of so much, and the shareholder will be approving this. That is the way it is actually done. That is one. And second thing is again the meticulous planning is actually required because the company secretary being a compliance officer who is going to monitor everything, and ultimately, although we say there's a cash, but the 5 working days, if we end up in paying the dividend somewhere on declaring the dividend on Friday or something, Saturday, Sunday being a bank closed, then out of 5 days, 2 days already gone. Because you need the board resolution, you need the opening of the bank account and other things out there. And again, there are restrictions, after 30 days, the account is to be transferred to the unpaid dividend account. Question arises, do we open the separate account or do we rename the same account as the unpaid dividend account? All these nitty-gritties are involved actually. So really speaking, it is a meticulous job of lot of planning. And our SS-3 talks right from ascertaining the source of the funds which are available, and is talking about the kinds of the dividend, procedural things, aspect, etc., and other things. And again, not only that, when you take about the dividend, any distribution from the profit amount to dividend. Suppose, for example, the company goes for some sort of the restructuring or arrangement, etc., and other thing and all. If the excess money is distributed to the share from the profit, under the income tax, this will be actually known as the deemed dividend. Then again, it will be taxed in the hands of the shareholder who are receiving. Some of the dividend is one topic which you keep on, dividend distribution tax. 1 year, regulator says it will be borne by the company. Other year, they say it will be borne by the investors. So both the ways it is there. It is actually traveling in the past so many years, 2 and 4. Currently, the dividend is actually taxable in the hands of the people who are actually at the recipient. I think our tax expert is going to talk about it. And again, what happens is the dividend payment in case of the preferred share. In case of the preferred share, what happens is the dividend amount, what is paid in the dividend share is already pre-committed. Because if we see any preferred share issued, it is 7%, 8%, 9% dividend share. That is the way it is actually there. It spells out. Dividend share,
Bala,
yeah.
We have to reduce introduction. We are running short of time.
Okay. So in case of the preference share, although it is a committed payment, so it is not very simple as you think dividend. It is a small topic. There is nothing, lot of integrities which are actually involved. I think Vedant is going to take us through all the things, and we have the experts here. We can have the view of the Sudhakar and also Dimple. Of course, Dipti is there on a practice in many companies and she knows the things, etc. We'll have the expertise on all this thing. Let us start with the presentation. As we go along, we can discuss. People are requested to put up their queries on the chat box and we will address then and there. And anybody wants to talk at the end of the presentation, they'll be allowed to speak. You can raise their hands and we can address the concerns.
Yeah, Mr. Bala, what I suggest that after the topic, relevant topic, parallelly relevant questions to the topic you start taking instead of all questions at the end. Okay? Okay. Vedant, you can start this presentation.
Vedant, you are on mute. You can start.
Yeah, it's visible.
Dividend and the Companies Act. We'll start from the basic definition of dividend. So what is dividend? Dividend is a return on investment made in the share capital of a company. as distinct from return on borrowed capital, which is in form of interest. In commercial usage, the term dividend refers to share of profits of company that is distributed amongst its members. As per Section 2, subsection 35 of the Companies Act, the term dividend includes any interim dividend. There is no specific definition of dividend given under the Act. But as per Secretarial Standard 3 issued by ICSI, a specific definition for dividend is given, which is dividend means a distribution of any sums to a member out of profits and wherever permitted out of free reserves available for the purpose. In simpler terms, dividend can be said to refer to a part of earnings that is distributed to shareholders of the company in proportion to the paid up amount of capital held by them. Governing regulations for dividend. Dividend is basically governed by Companies Act 2013 under Section 123. There are certain rules and rules issued by the rules issued for declaration and payment of dividend known as Companies Declaration and Payment of Dividend Rules 2014. Secretarial Standard number 3 issued by ICSI. The Secretarial Standard is not mandatory, but it is recommendatory in nature for as a good governance practice. SEBI Listing Obligations and Disclosure Requirements Rules 2014 and Guidance Note issued by ICSI. However, we are covering the major provisions of Companies Act and Secretarial Standards, and some points of for listed companies are discussed at the end of this presentation. Types of dividend. There are basically two types of dividend: interim dividend and final dividend. An interim dividend is a dividend that is paid by the company to its shareholder during the financial year and includes the dividend declared after the closure of financial year but before the annual general meeting of the company. As per SS-3, interim dividend means a dividend declared by the board of directors. Final dividend. Final dividend is final dividend is the amount declared by the board, recommended by the board of directors to be payable as dividend to the company's shareholders, which is subsequently declared and approved by the members in the annual general meeting. In case of final dividend, the approval of shareholders is mandatory. As per SS-3, final dividend means the dividend recommended by board of directors and declared by the members at the annual general meeting.
Just 1 minute, Vedant. See that suppose there may be a question that when the Companies Act has already defined a dividend, then why SS-3 again is defining the dividend as well as the interim dividend? One of the reasons for that is it was while we were formulating the Secretarial Standard 3, it was felt that the definition of Companies Act is not comprehensive enough. Since we are coming with a standard as such on dividend, it was felt that it is advisable to define dividend as well as the interim dividend. So, number one. Number two, no doubt about it, SS-3 is not mandatory. It is recommendatory only. So, as a good governance practice, it is always advisable to comply with that. In addition to that, my humble submission and advice to all the participants is that not only whether you comply with or not, please do give a reading to SS-3 as well as the guidance note thereof, because we know that there are several complications out there while you are implementing the decision of the dividend of the board, like opening a dividend account, and so many issues are there, whether it is to be confirmed or to be ratified, etc., things. Guidance note is very comprehensive enough and in which all these issues have been addressed to. So do kindly go through that. Thank you. Yes, Veda.
Yes. Difference between interim dividend and final dividend. Interim dividend definition. The interim dividend is paid by the company in middle of the year before finalizing the accounts. It may also be paid between. It may also be said that the interim dividend is declared and paid between two annual general meetings of the company. Final dividend. The final dividend is paid at the end of the closure of financial year on AGM, wherein the accounts of the company are approved and adopted. Declaration. Interim dividend is declared before finalization of accounts of the company in the middle of the year, and final dividend is declared after finalization and approval of accounts at the AGM. Interim dividend is declared by board. Final dividend is recommended by board and approved and declared by the shareholders at the general meeting. In order to declare the interim dividend, it is mandatory to have the specific provision in relation to interim dividend in the articles of association of company. And in order, in final dividend, there is no such requirement for articles of association.
So, Vedant, let me add over here that in case of interim dividend for corporate governance, as a good corporate governance practice, we've also seen that companies taking shareholders' approval. And at the same time, the articles may also have a clause where interim dividend may also require shareholder approval. Although the Act, it requires board approval for interim dividend, and SS-3 also talks about only the board approval. But yes, as a corporate governance practice, a shareholder approval here is also recommended. Thanks, Vedant.
Yes, ma'am.
The only thing is that the dimple here, the thing is like this. No doubt, articles of association has to have an article empowering the board for declaration of interim dividend. But my view is post Companies Amendment Act 2017, the board is empowered by the Act itself to declare the interim dividend. So hence, according to me, it is immaterial whether you have the article or not, because articles of association, always the Act override the articles. So Act itself has empowered the board. Earlier, what happened was under the 56 Act, even prior to Companies Amendment Act 2017, the board was not empowered to declare by suo motu. So articles have to authorize it, then only it could have declared the interim dividend. Whereas now, the board has a legal power to declare the interim dividend. Hence, number one, article, even if they are silent about it, there is no issue. Number two, approval of the shareholders is not at all required because the board itself is empowered to declare the interim dividend. The only thing is that board has to take all the precautions while declaring the interim dividend. What are those precautions? That we will discuss it over the presentation.
Secretarial Standard 3.
Just a minute. This is very interesting. Where, it's just a thought. So your article says, look, you have to go to the shareholders for an interim dividend, but at the same time, Act allows me. So so you mean to say, no, we can even say, look, I have a power through Companies Act, so there is no need to go to the shareholders. Again, yeah. I don't know.
For interim dividend, you don't need to go to the shareholders.
Right. So
board is empowered to declare the interim dividend. That is final. That's it. You don't need to go back to the shareholders for ratification or for this thing. As a good governance practice, even if you go, suppose, say, for example, once you declare the interim dividend and you distribute it, and tomorrow the shareholders say, no, we won't approve it, what you will do? This thought was there, as I have mentioned in my initial remarks. This was there in the earlier under the 56 Act also. That's why the board used to be extra careful, and most of the companies used to get it ratified or confirmed from the shareholders in the good olden days. Whereas, as I was mentioning, according to me, post Companies Amendment Act 2017, the board is empowered to declare the interim dividend. Hence, according to me, no shareholders approval is required. However, in the board's report, you have to mention that the company has declared, the board has declared an interim dividend of so and so the amount. And in case it is recommending any final dividend, you have to mention about that also in the board's report. And ultimately, per share, how much is the final dividend outflow? That also you have to mention in the board's report.
Because see, we have seen in the Companies Act 2013, where you can have a more stringent, regulation through articles, which is otherwise provided in the Companies Act. So this may be more stringent, where you are saying that, look, you have to go to the shareholders. So if those things are allowed, probably this can also be, of course, I fully agree with you. Act allows me, but articles, can, restrict the rights of the directors also and say, look, ultimately to come to this.
articles cannot override the Companies Act.
Right. Okay. That is not everybody.
That is-
Oh, yeah.
With that aspect, one has to keep in mind before
Mhm.
making any this kind of stringent provisions.
Hmm.
It should not come on the way that, if the article should not override the Companies Act, subject to that, you can have any kind of restrictions in the articles.
So Dagar, one small question I want to ask you. Since the interim dividend can be declared in between the two annual general meetings, even after the accounts are finalized, but the annual general meeting has not taken place, some reason or other, it is actually not taken place because we have a 6 month time and other things are done, but in the meantime, the accounts are finalized. Still, the interim dividend can be declared before the AGM, even after finalizing the accounts.
See, when you are declaring an interim dividend, you can always declare interim dividend for the previous financial year. Say, for example, we are in the year 24-25 and the month of July, and the year closed, that is 23-24 financial year, you can declare interim dividend even now. Okay, provided your AGM is not concluded and they have not adopted the accounts of 23-24. If your accounts are adopted, then you cannot declare interim dividend. You could have declared only the final dividend. Okay,
Yeah.
number one. Number two, that is number one. Number two is that when you are declaring the interim dividend, if you see the act, especially 123 subsection 3, if you see the resources from where the board can declare the interim dividend, it can declare interim dividend from the profits of financial year 23-24 or profits of the previous financial years, which are lying in the P&L account, or even the current year, that is 24-25 first quarter profits also, it can pay the interim dividend for the financial year 23-24.
So that means the interim dividend can be paid even after the finalization of account, not necessarily before finalize the accounts, it has to be paid.
It accounts, if they're adopted by the shareholders, then you
Correct.
cannot, otherwise you
Yeah.
can.
Yeah. I think the slide
Because
probably.
as we know that now dividend need not be provided in the balance sheet. Dividend is based on the distribution on the cash basis, not on the accrual basis.
So to this extent here, the slide which reads here, the interim dividend paid by the company at the middle before the finalization of the account, that is not reading correctly. It should be between the two annual general meetings. Yeah. Yeah, go ahead.
Yeah, Vedant.
Yes. Secretarial Standard 3, SS-3. The Secretarial Standard, here is a brief introduction about the SS-3. The Secretarial Standard on Dividend, SS-3, is formulated by the Secretarial Standards Board of Institute of Companies Secretaries of India and issued by the Council of ICSI and has been effective from 1st January 2018. Adherence to this Secretarial Standard is recommendatory in nature, but as a good corporate governance practice, it should be followed. SS-3 prescribes a set of principles in relation to declaration and payment of dividend and matters related thereto. These are equally applicable to financial as well as interim dividend unless otherwise stated. The principles set out in SS-3 relate to declaration and payment of dividend on equity as well as on preference share capital as per the provisions of Act and rules thereunder, and are in respect of dividend as it relates to a going concern. Also, it is pertinent to note that there are no deviations in SS-3 and Companies Act provisions along with the rules and regulations made thereunder. Secretarial Standard 3. The Secretarial Standard 3 is basically divided into 10 parts, which are discussed in the upcoming slides. First part is ascertainment of amount available for payment of dividend, and distribution as dividend. A company may declare dividend out of the following: out of profits and out of free reserves. As per SS-3, dividend shall be paid out of profits of the financial year for which such dividend is sought to be declared, and or out of profits of any previous financial year that are undistributed after providing for depreciation. Further, in case where a company has inadequate profits for a particular financial year, in such cases, the company may declare dividend out of free reserves subject to certain prescribed conditions as per the Act and SS-3, which are discussed in next slide, provided that the dividend shall not be declared out of securities premium account or the capital redemption reserve or revaluation reserve or amalgamation reserve or out of profits on reissue of forfeited shares or out of profits earned before the incorporation of the company. In order to declare dividend in conditions of inadequate profits or losses, the company must comply with the following conditions. These conditions are read with Rule 3 of Companies Declaration and Payment of Dividend Rules 2014. First precondition is that the rate of dividend shall not exceed the average of dividend declared in previous 3 financial years. Here, the condition that the dividend should be declared in previous 3 financial years is required, as the average of those 3 financial years should be taken, and in the current year, the such rate shall not exceed for declaration of dividend. Second condition is total withdrawal of accumulated profits shall not exceed one-tenth of the sum of paid up share capital and free reserves of the company as per latest audited financial statements. The amount withdrawn from the accumulated profit shall be first utilized to set off the losses of the company, if any. And last condition is that the balance of free reserves after such withdrawal shall not fall below 15% of the paid up share capital of the company. It is pertinent to note that interim dividend shall not be declared out of the free reserves. Restrictions on declaration.
Go back to the previous slide, Vedant. See, here also, there is always a question used to come. The rate of dividend shall not exceed the average of dividend declared in previous 3 financial years. Suppose in the previous 3 financial years, the previous 3rd year you have declared dividend. But year after that, you have not declared the dividend. And again, year after that, you have declared dividend. That means out of the 3 years, 2 years you have declared dividend, and the middle of the year you have not declared, and the year in which is in between, you have not declared the dividend. So denominator is to be 3 or denominator is to be 2. There used to be always this question, and some people used to think that since the dividend was declared only for 2 years, the previous 3 years average dividend, that doesn't mean if you have not declared a dividend in 1 year, it will not be taken. Because suppose, what is the result of this? When your denominator is 3, obviously the amount of dividend will be less.
Yes.
When you are dividing it by 2, it would have been more. The purpose of the average of previous 3 years dividend means you have to be conservative enough when there is, because of the insufficiency of the profits. That is one need to be very careful about this thing. This is also, if I'm not wrong, we have covered in the guidance, not very elaborately on this. Yeah.
Restrictions on declaration of dividend. There are certain restrictions wherein a company shall not declare the dividend if it has defaulted or there are continuous default on part of the company. First is redemption of debentures or payment of interest thereon. Second, redemption of preference shares or creation of capital redemption reserve. Third, payment of dividend declared. In this point, the dividend declared if the dividend declared in previous year or any interim dividend declared by the company is not paid, then the company shall not is not allowed to declare any further dividend. Fourth, repayment of any loan from bank or financial institution or interest thereon. And fifth, non-compliance of provisions relating to acceptance of deposits till such deposits are repaid by the company. If any of the default is yes, sir.
Yeah. So, Vedant, I would like to comment here is that if you see, all these are not there in the Companies Act. Act talks about only the fixed deposit default, not about all these things. But if you see rationally, when a company has not paid interest on the debentures, can it pay the can it pay the dividend, declare the dividend and distribute it? No doubt about it, legally it is not prohibited. Same as the case with preference shares. Similarly, in the previous year, you have declared dividend, but you have not distributed. In the current year, again, you can declare the dividend because it is not prohibited. Repayment of loan, the bank, for the company has borrowed money, and it is not repaying the loan, it is not repaying the interest. Of course, banks will always put a clause in the loan agreements that in case of any default, you are not supposed to declare dividends, or you have to take the bank's permission for that. That is a different aspect. But as far as the act is concerned, it is not putting any kind of prohibition on that. Same as the case with of course, the acceptance of deposits, it is there anyway. So when we were formulating the what's called as SS-3, as I mentioned, that one of the reasons for the secretarial standards is for enhancing the governance aspects also. So considering the good governance corporate practices, all these issues, in case you are adopting the SS-3, in these cases also, the board is not supposed to declare dividend. And as a prudent financial policy also, forget about SS-3. If I am a director on the board and the company is indulging in all these things, I should ensure that no interim dividend, no final dividend is to be there, unless until these have been taken care of. Because on all these aspects, the company's financial prudence is not there. That point of time, you are not supposed to recommend or declare a dividend. Yeah. Dimple, wherever you can, you have to give your comments, please feel free to join, because I always, these secretarial standards are, I'm very passionately attached to that. So I do share some of my thoughts on that.
Just to add on, it also adds on that if there's any extension of time by court or tribunal, then till that extension of time. So the idea is over here, the purpose is that these defaults should be done good. And unless, because yes, it's a question mark on the financial capacity or prudency of this decision. If the board is again going ahead with declaration of dividend till the time these defaults are there. So these defaults, the idea is these defaults should be done good. Even a tribunal has extended time till that time, we cannot go ahead with any further dividend. That's it.
Yeah, good inputs, Dimple, yeah.
So, Vedant, you can go ahead.
Yes.
Yeah.
Declaration of dividend. Dividend shall be recommended by board. The basic condition as to declaration of dividend, here final dividend, is that it should be recommended by the board of directors of the company for approval of members in the annual general meeting. Dividend based on any stipulated conditions is not allowed. For example, approval of financial statements or banks or foreign collaborators or compliance with any other contractual obligations. Means any dividend declared by the company shall not be attached with any preconditions that if these conditions are satisfied, then only the dividend will be declared or paid to the shareholders. Dividend must be declared at the annual general meeting of the company. The dividend shall relate to financial year and shall be declared by members at the annual general meeting of the company after adoption of financial statements of company. The members may declare a lower rate of dividend than that of recommended by the board and not vice versa. Further, the members may also reject the proposal for declaration of dividend. Here in this point, it is specifically mentioned that the shareholders may also reduce the percentage of dividend, but they cannot increase the percentage as recommended by the board of directors.
So
in this case,
yeah.
It is very clear that the Companies Act is not empowering the shareholders to declare dividend without the recommendation of the board. In fact, at one point of time, somebody asked me a question that in case of a private limited company, whether the company can have in its articles empowering the shareholders to declare the dividend on their own without any, even if there is not recommended by the board. The answer to that is again the same thing. The articles cannot override the Companies Act. If the Companies Act is prescribing that the board has to recommend the dividend, and the shareholders, as Vedant you rightly mentioned, they can what's called as rejected altogether, whatever the proposal is there, or alternately they can reduce, but they cannot increase the dividend. And similarly, shareholders cannot so moto declare dividend without any recommendation by the board.
So this conditional approval is not allowed under the Companies Act, right? Okay.
Yeah.
So can a board pass a resolution stating that, look, if this assets get sold, and then only we approving the same, dividend. So again, this will be more of a conditional, right? So this cannot be.
It cannot be.
This will also be.
Absolutely, that cannot be
be.
done, Atul Mehta, because dividend is normally declared only out of the profits. When it comes to the interim dividend, the current year's profit and plus drawing the money which is lying in the profit and loss account. When it comes to the final dividend, is including the free reserve which are available for declarations. Conditional dividend is never permitted.
Okay.
As you rightly say, if they sell something, if they make a profit or something like that, board is always empowered to declare what you call a special dividend at that particular time. They can do that.
Okay, and this has to be at the board meeting, right? I mean, approval of the dividend has to be at the board meeting.
Interim is actually declared by the board, but when it is coming to the final, it is only a recommendatory by the board and approval by the shareholder.
Okay.
No, Atul bhai, the answer to your question is that whether interim dividend can be declared by the board by way of a circular resolution.
Yeah.
Similarly, whether the final dividend can be recommended by the board by way of a circular resolution.
Yeah. So
answer to that is Act is silent about this. Act is not mandating that these decisions are to be taken at the board meeting only. However, a board cannot be so reckless by passing the resolution by circular resolution, because as I mentioned in my initial remarks, it is an onerous responsibility entrusted upon the board. So the board has to be very, very clear as far as the financial strength of the company for that particular financial year. Similarly, whether the depreciations outstanding, if any, which is not written off, whether it has been taken care. Similarly, whether any what's called as your tax is there, any kind of outstanding taxes are there. So the depreciation is to be completely written off, taxes are to be taken care of that. And similarly, if any preference shareholding are there, that is to be taken care of. There are so many aspects while you are declaring an interim dividend, which the board has to take care of. So legally, though it is not prohibited, but pragmatically, as well as a good governance practice, these decisions are not to be taken by way of circular resolutions.
Sudhakar, you may also be knowing in your experiences, whenever the dividend declaration actually comes, the CFO comes out with a proposal of different slabs. If you declare 10%, 20%, 30%, 40%, what are the various impacts? What is the financial impact will happen? What is the things, etc. and other things. Board of directors actually discuss and deliberate on this issue, and finally they decide what is the amount of the dividend. It is not that dividend is just agreed in the particular percentage it is declared. That is not the case. As you rightly say, there are a lot of discussion and deliberation is required while arriving at it. That is the normal practice in most of the companies. Correct, na?
See, at the same point of time, while a board is declaring interim dividend, if that company is having an audit committee, the financial statements are to be also vetted by the audit committee, and the interim dividend with the decision is also to be recommended by the audit committee to the board. And then only the board is to declare it, because audit committee is also having a responsibility as far as financial aspects are concerned. This particular aspect also it is dealt with in SS-3 as well as in the guidance.
Guidance note is very exhaustive, Sudhakar. I must once again recognize.
There are certain questions as regard presentation. You can take it because there are queries on the presentation also.
Okay.
And if it is relevant to our current discussion, please take it now only.
Okay. Okay, let me start with the first query. What are the aspects to be considered for a middle year deposit taking NBSC for declaration of the dividend, particularly in the RBI regulations?
I think that we can take it later because we were discussing on other questions.
Okay. Can interim dividend be declared by the board by passing the circular? I think you addressed this. Circular resolution question you actually addressed here. Fulfillment of all of the legal requirement, declaration of the payment dividend under the law and adherence to the provision of the AOA. The Companies Act does not seem to restrict the declaration of interim dividend. I think Sudhakar has well addressed this question. Can interim dividend be paid twice? As much as time you want, you can pay. There is no problem, subject to fulfilling the requirements of the profitability, providing the provision expenses, etc. Nothing is restricting. With respect to the interim dividend, please advise interim dividend paid by Adar Quantec in the month of April 2024. I really do not know what exactly the question here. The question is, with respect to interim dividend, please advise interim dividend paid by Adar Quantec in the month of April 2024.
Because in the absence of the facts, Bala, we cannot answer that question.
No, I don't know really. I'm not able to understand the question because I also know this company has paid an enormous amount of the dividend, around 300% or something. That was the news in the sometime. Okay. You mentioned in your presentation that the interim reserve cannot be declared out of the free reserves, or can it be the dividend be declared out of the accumulated balances in the P&L account in the previous year, not a transfer to the reserve transfer, would P&L account be yet to be transferred to the reserve be capitalized with free reserve? I think Sudhakar has well addressed that. He said very clearly, so long as the profit and loss account carried over profit is actually kept over there, it is not transferred, that can be well utilized.
No, I say that the question is that what Vedant has mentioned is, whenever an interim dividend is declared, if there is a loss in the previous quarter, that point of time, you cannot declare dividend out of the free reserves. Suppose, say, for example, I am declaring dividend in the month of July for the current financial year only, but in the first quarter, there is a loss. That point of time, I can declare dividend out of the surplus in profits, but not out of free reserves. That's what Vedant has mentioned, and rightly so also.
If a company has not declared any dividend in the last 3 years, is it prohibited from declaring the dividend out of the free reserves?
No, it is not so. It can
not so, because again there is one more thing is there. In this case, company has not declared dividend. What reason we do not know. Whether profit making company or loss making company, we do not know. Okay, but there is nothing is prohibited actually. But in case of the loss or inadequacy of the loss making company, you have to fulfill those conditions. Otherwise, you can declare. There is no problem.
And sir, the 3 years of reference is only for what can be declared, the average of 3 years, 3 financial years, and not like whether can be declared or not can be declared.
Okay.
Yeah.
I think this question is understood. Yeah.
Doesn't matter. Say in case the company has not declared any dividend in the previous 3 financial years, the average question is not there. The company can declare any amount of dividend. Yeah.
I think there's one question addressed to you, Sudhakar. In the earlier example, whether the denomination was 2 or 3, please help as I missed it. That is
See, as I told you that if in this particular question, the previous 3 years, the company has not declared any kind of dividend. That point of time, averaging issue is not going to be there. If the company has declared any dividend in the previous 3 financial years, that point of time, the average issue will come. And provided that also there is a loss. If there is no loss, you can declare whatever the interim dividend you want to declare it, you can do that. In case of a loss or insufficiency of the profits, then the average issue will come. That point of time, the denominator is always to be 3. Say, for example, if the company is 1-year-old company, where is the question of denominator 3? It cannot be. The company is, say, for example, 2-year-old company. So this is how it is to be seen. Okay.
So, sir, once the company is more than 3 years old, irrespective of whether the dividend was declared or not, the denominator will be 3. That's how it works.
No, in the say, if I mean, I'm again telling the same thing. Please refer to the guidance note again. But as I was mentioning, in the previous 3 financial years, if there is no dividend declared, then you don't need to average out because there is no question of any dividend. How can you average it out? Okay. So in the current financial year, when you are declaring an interim dividend, if you have sufficient profits, no problem. If you have insufficiency of the profits, if you have any surplus in the previous profit and loss account, you can do it. Suppose you don't have a surplus, but you have free reserves. You can, if it is an interim dividend, obviously in case of losses, you cannot declare out of free reserves. But final dividend, yes, you can. Okay.
Whether reference of section 102, subsection 2 in point number 2 is correct, kindly guide. Where it is section 102 is appearing here, I don't know. Whether reference of section 102, subsection 2 in point number 2 is correct.
I think that is the AGM notice, if I am not wrong. Section 102 is dealing with AGM provisions.
AGM, yes.
I'm not very sure of that.
Does the audit committee has any role in recommending the dividend? I think that you well addressed actually.
Yeah.
To declare a dividend is a prerogative of the board, keeping in perspective the financial losses and future cash requirements. Do shareholders have any right to impose upon the board of a financially healthy company to adequate profit does not recommend the dividend each year? I think this also
See, it is not mandatory for the board to declare a dividend, even if the company is having sufficient profits also. The board may not declare dividend. Suppose sometimes it may so happen the companies might be having the future funds requirement. Suppose look, they want to go for an expansion project or a diversification project or for acquiring another company or something like that. The company requires the finances. So it may not declare a dividend. So it is the decision of the board that shareholders cannot compel the board to declare a dividend.
Yeah, in fact, in your earlier talks, you definitely did. Shareholder has got the right after the recommendation of the board of the dividend. Either they can actually reject it in whole, or they can actually reduce it. They cannot improve upon. That is the only right they have actually. Yeah. I think that is all the questions for the time being. Whether you can move forward.
Dividend is in arrears not allowed. This one basically means that a company which has a company cannot declare the dividend with retrospective effect for the previous financial years. Declaration of interim dividend. The board has the power to declare interim dividend, unlike the final dividend, which is required to be recommended to members for their approval. Mode of declaration of dividend. A company shall not issue bonus shares in place of dividend. That is, a company shall not issue shares instead of declaring dividend. Further, under section 123 subsection 5, declaration of dividend in any manner other than cash is prohibited. Here, the discount coupons are also excluded, the issue of which shall not be considered as dividend or deemed dividend, deemed to be declared as dividend. Declaration of dividend. A company may declare a dividend in both of the following conditions: in case of profits, or in case of inadequate profits, or in case of losses. In case of profits, there are no restrictions on declaration of dividend. Whereas in case of inadequate profits, the rate of dividend is restricted to maximum of average of rates of dividend for the preceding 3 financial years by complying with the 4 conditions given under the prescribed rules as discussed earlier. Deemed dividend. Read with section 123 subsection 5. As per section 120, as per the section of the Companies Act 2013, no dividend shall be paid by the company in respect of any share except to the registered shareholder of such share or his order or to his banker, and shall not be payable except in cash. Here, the term shall not be payable except in cash prohibits the issue of any other kind of shares in lieu of dividend. And even if such shares are issued, they shall not be deemed as dividend. Deemed dividend. Deemed dividend is defined under the Income Tax Act 1961. The concept of deemed dividend treats a specific set of payments made by closely held companies by way of loans and advances to certain shareholders of the company or to the entities in which such shareholders have a substantial interest. Any payment made by way of loan or advance, the recipient of loan or advance will be liable to be taxed on the receipt of amount as dividend, to the extent to which the company has accumulated profits under the deeming provisions of section 2, subsection 22E. Members entitled to dividend. The basic condition as to declaration
Just
of
1 minute,
dividend
go back to the Vedant, go back to the previous slide, please. See, this deemed dividend is only for the purpose of Income Tax Act as far as the tax related aspects only. This has nothing to do with the Companies Act. As far as the Companies Act compliances are concerned, you don't need to worry about that. Under the tax, for the purpose of the income tax, it may be a deemed dividend or whatever it is. But in such case, as far as section 123 to 127, whatever the legal provisions under the Companies Act are there, they need not be complied with further. Yep.
Members entitled to dividend. The basic condition as to declaration of dividend is that it should be paid to the registered shareholders of the company. Further, in respect of shares held in physical form, the members whose name appear in the register of members shall be entitled, and in case of demat or electronic holders, the beneficial owners as on record date shall be entitled to the dividend. There are certain preconditions for declaration of dividend on equity shares. They are: preference shareholders shall be paid dividend before the dividend is paid to equity shareholders. However, in case of interim dividend, the board should take into account such sum as would be necessary to be paid as dividend to the preference shareholders before consideration of interim dividend. Here, the company has a contractual obligation to pay a dividend to preference shareholders before the declaration of dividend for equity shareholders, as the preference shares are issued with the precondition that they will have first right on dividend. Arrears in dividend on cumulative preference shares shall be paid before payment of any dividend on equity shares. Further, it is provided that where a company has issued equity shares with differential voting rights as to dividend, the terms of issue of such differential rights, shares with such differential rights, shall govern the rights of each such class of shareholders as to the receipt of dividend.
See, here also one issue is there. In fact, there was a question has arisen, as Vedant has mentioned, that in case of preference shares, the coupon rate is decided. That is 8% preference shares means 8% is the dividend which is to be paid. Of course, depending upon cumulative, non-cumulative, all those issues are there. But the question is that whether that dividend before making the payment to the preference shareholders, whether it is to be declared by the shareholders or by the board of directors, or without that also it can be paid, because this is a contractual obligation, the so-called. The SSB felt that the dividend on preference shares is also to be declared by the shareholders. Then only the payment can be made. That's why you might be seeing that several companies that before, in case the company is having preference shares and in case any dividend is going to be declared for equity shareholders, before that definitely you have a preference shareholder dividend declaration also.
Declaration of dividend in abeyance. This is the case where an instrument of transfer in relation to transfer of shares is received by the company, but due to certain reasons, such transfer is not registered. Then the dividend on such shares should be transferred to unpaid dividend account. There is an additional condition that members may authorize the company in writing to pay dividend to transferee specified in the instrument of transfer, and the company shall act upon such authorization. However, in case of any discrepancy in such instrument, the company shall not act upon the same, and shall intimate the members accordingly and proceed to transfer the amount to unpaid dividend account.
There is somebody has put up a question. Any particular clause to fix the record date or declaration we can take any?
In the good olden days, where in fact, Dimple, I am actually answering all the questions. I'm sorry for that. In fact, wherever I think you being a panelist, I think first right of answering is yours, not mine.
No, sir,
Please
please,
do that. After that, I will come in.
please go ahead, sir.
Okay. So earlier, what used to happen was the shares were physically transferred. Though the demat was there, most of the times the companies were having physical share transfers. That's why we used to have a book closure. In fact, in the good olden days, we used to have as many as 42 days book closure used to be there, maximum time. And companies used to have hundreds of, in fact, companies like Reliance, we used to have some thousands of share transfers, which used to come just before the declaration of dividend things. Whereas now that issue is not there because in the demat mode, there is no question of any share transfers and all. That's why record date is sufficient. Because there should be a cutoff date on which the shareholders are entitled to dividend. So to demarcate that entitlement of dividend, you have to have a registered record date. As far as the listed companies are concerned, there are different provisions are there for intimating the stock exchanges, how many days before you have to do that. Similarly, when the company takes the board takes the decision of dividend, within how much time the stock exchanges are to be intimated and all, those are to be complied with. In case of any kind of unlisted companies are concerned, you have to just go with the Companies Act provisions only. Just intimate the shareholders that this is going to be the record date, and then accordingly, that is whoever are there on the date of that record date, the dividend is to be paid. Yeah. And another issue is that sometimes it may so happen, again, the same thing, because these days, this issue has no relevance at all. Somebody might have purchased the physical shares. They are yet to be lodged for share transfer with the company. That point of time, you don't need to keep the dividend in abeyance. You have to pay the dividend to the member who is a registered shareholder. However, if that the person who has purchased the shares have lodged the transfer deed with the company, and due to any kind of defect or anything, the company is not in a position to transfer those shares, that point of time, you have to keep the dividend in abeyance. Okay? Yeah, go ahead there.
Yes. Payment of dividend. Following are the provisions relating to payment of dividends. Deposit into a separate bank account. The amount of dividend shall be deposited in a separate bank account within a period of 5 days from the date of declaration. Here, it is to be noted that the 5 days does not means the holidays are counted in calculation of those 5 days, like Saturday, Sundays, etc. The payment shall be made within 30 days from the date of declaration. Such amount deposited in a separate bank account shall only be utilized for payment of dividend or transferred to unpaid dividend account. Mode of payment of dividend. As discussed earlier, the dividend should be paid in cash and not in kind. Dividends payable in cash may be paid through payable at par, check or warrant, or in electronic mode of payment approved by the Reserve Bank of India. The company shall take necessary steps to curb the fraudulent practices with respect to encashment of dividend checks and dividend warrants. As per the current scenario, most of the companies have their shares dematerialized, and the bank details of the members of the company are registered with the depositories. So most of the times the payment of dividend is made through electronic modes only, through bank transfers. Validity of dividend check or dividend warrant. This is the case wherein the shares of the company are physical, or the shareholders. There are many shareholders of physical holding shares in physical form. The initial validity of check or warrant of dividend shall be 3 months from the date of issue. In case such check or warrants remain unpaid after the initial period of validity, a fresh instrument shall be issued by the company within 15 days of receipt of valid request from the member concerned, provided that the proper record of such issues shall be maintained in register of dividend. A duplicate check or warrant shall be issued only after obtaining an indemnity or declaration of the concerned member. Here, the encashment or the status of earlier check or warrant issued should also be checked by the company. In case of partly paid shares, the dividend shall be paid in proportion to the paid up part of such shares.
Well, somebody has put up a question. In case of the company, when under winding up, the amount received by the shareholders or contributors in excess of the share capital, will it be treated as a dividend? And whether that distribution will be paid above capital will be subject to these rules. I think they are talking about the deemed dividend, I think.
See, as far as for tax purposes, it may be considered as a dividend, as a deemed dividend, or as Vedanta has mentioned. But as far as the Companies Act is concerned, that will not amount to a dividend as such. So you don't need to comply with the dividend provisions.
There's one more question has come. Annual account for the year 21-22 are yet to be approved by the board. Can dividend for 21-21 be recommended for this year? If yes, is there any limit on amount dividend? Account of the subsequent years are yet to be approved by the board, audited and adopted, and no dividend have been paid. I really don't know how to think, because
The company is defaulting and holding the AGMs and adopting the accounts. That doesn't mean you will declare the dividend like this. So according to me, if the subsequent accounts are not finalized or adopted and the company is not holding the AGMs, it should not declare a dividend for the financial year 21-22. It's not a good practice at all.
can a closely held unlisted company pay dividend without transferring to the separate account by RTGS on the same day?
See, it cannot be, because the dividend, it is the requirement under the law is a separate bank account is to be opened. So whether it is a private company or a public company, listed or unlisted, whatever it may be, you have to open a separate account. The amount is to be transferred, and from that account only the dividend is to be distributed.
Can a listed company pay a dividend to the shareholder holding share in the physical mode, whose bank detail mandate only it is payable and registered with the RTA, but the PAN nomination choice, email ID, mobile number are not shared, updated by the shareholders?
See, if the shareholder has given the electronic mandate to the company, as far as the dividend payment is concerned, they can make that electronic transfer. If that electronic mandate is not given, a listed company still can pay the dividend by way of a physical warrant. There is no prohibition on that. Because there are several places still in India where electronic transfer is not possible. So there definitely the companies can pay the dividend by way of a physical warrant.
Yeah, that's all. Vedant, you can move forward.
Yes, sir. Payment of dividend. It is provided that no dividend shall bear interest against the company, except in case of defaulting payment or dispatch of dividend warrant or check within the prescribed period. There are certain exceptions to this provision. The following should not be considered as default on part of company. The dividend could not be paid by reason of operation of law. The shareholders has given directions to the company regarding payment of dividend and those conditions cannot be complied with, and same is being communicated to the concerned shareholder. There is a dispute regarding right to receive dividend. The dividend has been lawfully adjusted by the company against the sums due from such shareholder, or for any other reason, the failure to pay dividend or post the check or warrant within prescribed period was not due to any default on part of company.
So here, the company secretary is to be very careful for the payment of dividend, though there are certain cases where it will not be considered as a default. Say, for example, it says that there is a dispute regarding the right to receive the dividend. Suppose I am the registered holder and somebody is raising an issue that I have sold the shares, but they are not yet to be lodged or something, getting a dispute unless until the company has substantial evidence. Yes, there is a dispute existing, and or any kind of prohibitory order from the court or an injunction, something like that should be there. So the company should not be in the judgment situation and then it decide on its own, okay, there is a dispute and I will not pay the dividend. It should not happen like that. Because tomorrow when the regulator questions that, you should be able to substantiate that, yes, there is a genuine difficulty, a legal difficulty in payment of dividend. That's why it could not be paid. Otherwise, the company will come under the non-compliances. And then the penal consequences will be followed.
In case of the inter-se shareholders dispute, which is subject matter of the court, which grants the status quo, how will the company deal with the dividend on these shares in its fiduciary capacity?
See, if the court gives an injunction that the dividend is not to be paid to any of the party and the dividend is to be kept in abeyance, the company has to follow the court order. But however, the company that either of the shareholder has to approach the company so that the dividend is to be kept in abeyance and a copy of the court order is to be provided to the company. Suppose if the company is not aware of that court order and it paid to the shareholder who is as per the ROM, then the company is not responsible for that.
Yes, Vedant, move forward.
Yes, sir. Unpaid dividend. Transfer to a separate bank account. The amount of dividend remaining unclaimed or unpaid after a period of 30 days from the date of declaration of dividend shall be deposited into a separate account titled as unpaid dividend account. Such transfer shall be made within a period of 7 days from the expiry of 30 days. In case of default, the company shall be liable to pay interest at 12% per annum. Provided that the company shall within a period of 90 days of transferring such amount to unpaid dividend account, prepare a statement containing the names, last known addresses, and the amount of dividend to be paid to each of such members and upload it on the website. In relation to this, the provision of transferring the amount to a separate bank account, the general practice made by the companies is that they change the name of the existing account made for the transfer of dividend amount to unpaid dividend account. Transfer to IAPF. The amount which remains unpaid or unclaimed after a period of 7 years from the date of transfer to a separate account shall be transferred to the Investor Education and Protection Fund along with interest, if any, within a period of 30 days from the expiry of such 7 years. Further, the company shall file necessary forms with IAPF from time to time. Before making any transfer to IAPF, the company shall give a public intimation to the shareholder at least 3 months prior to the due date of making such transfer to IAPF.
Let me add over here, Vedant, that the same account, while you have written that the company shall transfer to a separate account titled as unpaid dividend account, but practically what is seen is the same account is renamed as unpaid dividend account, and also there's a query which has been raised whether a separate account has to be opened each year and the same account cannot be used every year. Yes, there is a separate account to be opened every year for dividend purposes.
Yeah, in fact, many of the companies, if you see the balance sheet, they normally write, interim dividend account for this particular year, or final dividend account for this particular year. Like that, the account reads like that only pertaining to the particular year, because the 7 years period is over, the money is to be transferred. So if you open one account, how will you keep the track? And so separate account will have to be open for each year.
So, Dimple, yeah, sorry.
Yeah.
Yeah, so Dimple, many times
See,
people
the
say,
only thing is that,
sorry,
Deepti, go
no,
ahead,
so
please. Sorry. Please go ahead,
Many time
Dipti.
people, many time people raise the question that we open this account this year, given the name say 2024, we transfer the amount, all the amount is paid, and instead of closing the, then next year they say the bank account, because that account purpose is served. Same bank account next year, whether we can name it and with the bank we can say, that kind of question also comes. What is your? Dimple? Yeah, Dimple, you can go ahead.
Yeah, same thing what you are saying, Dipti, rightly so.
It
Ah.
will be.
Akshay, please go on mute.
1 minute. Akshay, you should be on a mute. Yeah.
So what Dipti, as you're rightly mentioning, in case a company, mostly it happens in case of private companies or closely held public companies, where the dividend account is open for the current financial year for which you have declared the dividend, and the entire dividend has been paid. There is no unpaid balance lying into that account. In such case, next year, when you are declaring the dividend, the title of the account is to be changed by the bank. And then, of course, you can transfer the money into that account. So you have two options. Number one, close the account, open a new bank account. Sometimes you feel that opening a new bank account, because these days the KYC norms, this, that, whatnot are there. So I am ensuring that the dividend is paid completely from that account, not a single rupee is lying in that account. In such case, I can get the title of the account changed as if I am opening a new account, and I can utilize that account. But for whatever the reasons it is, even if a single rupee is left in that account, that cannot be used.
Can an interim dividend account open be used for the payment of the final account, or a new account needs to be opened?
The same answer what I have given just now.
Yeah, you are right. Actually, if the account becomes nil, you can do it. But otherwise, if the balance is there, then the question of the 7 years period will write. You have to reckon with that. So that is there. Yeah. Yes, Vedant.
Yes. Transfer of shares to IEPF. All the shares in respect of dividend not paid or claimed for a period of 7 years shall be transferred to IEPF subject to conditions. The company shall send individual notice to the concerned members at least 3 months in advance at his latest available address registered with the company, giving details of members and the shares due for transfer to the fund. A notice shall also be simultaneously published in the leading newspapers in English and regional language, having wide circulation in the place where the registered office of the company is situated. Further, any person may claim his shares from IEPF on submission of such documents as prescribed and by following the procedures as prescribed. Timeline for dividend. Declaration of dividend. The first day. Transfer of amount declared to a separate bank account within 5 days from the date of declaration of dividend. Payment of dividend to shareholders within 30 days from the date of declaration. Where the dividend is declared but remains unpaid or unclaimed, it should be transferred to unpaid dividend account within 7 days from the conclusion of 30 days from the date of declaration of account. It makes it 37 days. Transferring remaining unpaid or unclaimed dividend to IEPF within after conclusion of 7 years and will within 7 days. The 7 years shall be counted from the date of actual transfer to unpaid dividend account of the company, unpaid dividend to the company's dividend bank account. These are some IEPF forms and IEPF compliances to be made by the companies. Statement of amounts credited to IEPF within this is the IEPF form 1, which is to be filed with the fund within a period of 30 days of amount becoming due to be credited to the fund. IEPF form 1A. Statement of amounts credited to Investor Education and Protection Fund pursuant to Rule 5.4A within 60 days from the date of these notifications. This was the earlier form. Statement of unclaimed and unpaid amounts within This form is to be filed within 60 days from the date of AGM or the last date on which the AGM should have been held. Details of nodal officer are also to be filed with IEPF authority, and any changes in the nodal officer should also be intimated to the IEPF authority within a period of 7 days of such change. IEPF Form 3 is the case where, in case where the shares or unclaimed or unpaid dividend account are not transferred to the fund due to an order of court, then such amount must be transferred and intimated to the IEPF authority within a period of 30 days from the end of financial year. IEPF Form 4, Statement of shares transferred to IEPF account. This is a statement which is to be filed with IEPF authority within a period of 30 days from the 30 days of the shares due to be transferred to IEPF authority. It means it is to be filed within 30 days of transfer. IEPF Form 5, Application to authority for claiming unpaid amounts and shares out of Investor Education and Protection Fund. For this form, there is no timeline specified, so the members or shareholders may make this application at any point of time when they come to know about their entitlement. IEPF Form 7, Statement of amounts credited to IEPF on account of shares transferred to the fund. This form is to be filed within 30 days of transferring the dividend to IEPF authority along with the unique transaction number for such transfer to IEPF. Revocation of dividend. A dividend once declared cannot be revoked. That is, once a company declares a dividend, it becomes a liability on part of company which is mandatory to be paid. In other words, a dividend once declared becomes a debt for the company. Preservation of documents related to dividend. All the documents related to declaration and payment of dividend shall be preserved for a period of 8 years. While calculating the period of 8 years, the current year in which the period of 8 years is being calculated shall not be considered. Means this provision requires the calculation of 8 full years. Such documents shall be destroyed only with the approval of board and as per the policy approved by board. These documents include dividend checks, dividend warrants not received by the company, records of reissue of dividend checks and warrants, records of requests received from the shareholders for reissue of such instruments, etc. In case of dispute or pending litigation, the document should be preserved till the conclusion of such proceedings or litigation. In case where a company has outsourced the preservation to banks through undertaking, outsourced the preservation of such documents to the banks through an undertaking, such documents shall be preserved for a period specified in the undertaking or for a period of 8 years, whichever is longer. Disclosures with respect to dividend. There are certain disclosures to be made by the company in respect of dividends declared or paid by the company. Disclosures in notes to accounts of the financial statements disclosing the amount of dividend proposed to be distributed to equity shares or preference shareholders. Disclosures in balance sheet stating the amount lying in unpaid dividend account along with interest thereon under the head current liabilities and provisions. The board's report shall also disclose the amount of interim and final dividend as per section 134 subsection 3 clause K. The annual report of company shall disclose the total amount lying in unpaid dividend account of the company in respect of last 7 years and when such unpaid dividend is due to be transferred to the IEPF. Further, the amount of dividend, if any, transferred by the company to IEPF during the year shall also be disclosed in the annual report.
Here, one more thing is also there in case of cumulative preference shares. If the dividend is not paid in that particular financial year, the dividend gets accumulated over a period of time. So the corresponding in the financial statement, the notice to be given that the accumulated dividend in case of cumulative preference shares is X amount. Sometimes it may so happen that during the tenure of the preference shares, that the accumulated dividend could not be paid because of the insufficiency of profits or losses, whatever the case may be. But in the meantime, the redemption period is over. The preference shares are to be redeemed. The company might have redeemed the preference shares. Now the question comes whether the company is still obligated to pay that accumulated dividend. Answer is yes. Unless until the dividend is waived off by the concerned preference shareholders, that liability is going to be there. And in such case, the company has to give a contingent liability note in the notes to accounts. And as and when the company is having profits, before declaring any kind of dividend on the equity shareholders, the company has to pay the cumulative dividend to the preference shareholders, to those, concerned preference shareholders. Okay.
Additional compliances by listed companies with reference to dividend. All equity shares issued by the company shall rank pari passu, means all the shares shall have equal rights. The company shall not issue shares in any manner which may confer on any person superior rights as to voting or dividend. The company shall give prior intimation to stock exchange about the board meeting in which dividend is to be declared, and it shall intimate the record date for payment of dividend. Declaration of dividend at least 5 days prior to the record date. That is, the company must declare the dividend at least 5 days prior to the prescribed record date for deciding the entitlement of shareholders. The company shall disclose the outcome of board meeting held to consider the dividend matters to the stock exchange within 30 minutes from the closure of meeting. In case of payment of dividend through warrant or checks payable at par, if the amount of dividend exceeds 1,500 rupees, the company shall opt for speed post to send such checks or warrants to the shareholders. The company shall declare and disclose dividend as per on per share basis only. No other formula or it should be used. The company shall not forfeit unclaimed dividends before the claim becomes barred by law, and such forfeiture, if effected, shall be annulled in appropriate cases. Dividend distribution policy shall be formulated and implemented by top 500 listed companies. The company shall disclose in its corporate governance report the dividend payment date under the general shareholder information section.
There are two things here, two observations. One is that the company shall declare and disclose dividend on per share basis only, not as a percentage of dividend, because the face value of the share may change. Sometimes it may be a 2 rupee share, sometimes maybe 5 rupee share, 10 rupee share. So if you are giving a percentage, it may mislead the people that what is the, they may not be even clear about it. So that's why, number one, about a few years before, the stock exchange, the SEBI had changed this. The dividend is to be declared on per share basis only. And several companies, what they also do is they're also given, apart from this thing, the percentage of dividend also. Second thing is, whether, if I am not wrong, it is not top 500 listed entities to formulate a dividend distribution policy. It should be top 1,000, I think. It has been revised. Just kindly check that.
Yeah, yes. You're right. Top 500 is divided to 1,000. Yeah.
Taxation of dividend. Pursuant to Finance Act 2020, dividend income is taxable in the hands of members with effect from 1st April 2020, and the company is required to deduct tax at source from dividend paid to members at prescribed rates. For resident members, tax shall be deducted at source under Section 194 of Income Tax Act. Shareholders having valid PAN, the rate of TDS shall be 10% as notified by Government of India. In recent budget, the percentage of TDS has been reduced to 7.5% subject to DTAA provisions. Second, shareholders not having valid PAN or non-resident shareholders, or the shareholders who have not filed their income tax returns for immediately preceding financial year. 20% of TDS or as notified by Government of India. In recent budget, such 20%, the rate of 20% has been reduced to 15% and subject to DTAA provisions. It is pertinent to note that earlier there was a threshold of 5,000 for the deduction of TDS, which has been removed through new budget, and a standard deduction of rupees 10,000 has been introduced, after which the income would be charged as per the slab rates.
there is a question is put up actually, is there a higher tax rate applied for plants who are categories of specific person, that means who are not full filed the income return for the last 3 years? I think this slide is answering that question actually. Yeah, go ahead.
Yes. Case laws. In Raghunandan Neotia, we New Central Jute Mills, it was held that the declaration of dividend is a business of annual general meeting, and the dividend cannot be declared with retrospective effect with reference to previous years. The accounts of which are closed at the annual general meeting held for those years. This case basically states that the decision of this case is basically that the dividend for the previous years for which the accounts have closed and the AGMs are held, for such years the dividend shall not be declared with retrospective effect. In case of Maharani Lalita Rajya Lakshmi versus Indian Motor Company, final dividend for any it was held that final dividend for any financial year can be declared and paid only when the balance sheet and profit and loss account are presented to the shareholders at annual general meeting, and the shareholders, after consideration of the amount recommended by directors, approve the same or such lesser amount as may appear to them to be reasonable and proper. It is thus prerogative of board of directors to recommend the amount of dividend to be distributed. This case majorly states that the shareholders can approve the rate of dividend below the rate of dividend recommended by the board of directors, or they may also reject the reject the proposal of dividend, but they cannot increase the amount of dividend. An adjudication order was passed by Registrar of Companies of Delhi and Haryana bearing order number 5938-5942 dated 11th October 2022 in the matter of IDP Education Exam Services Private Limited for penalty for violation of Section 123 of Companies Act. The violation made by the company and company's board of directors was that they declared an interim dividend payable to the registered shareholders of the company for financial year 2021 out of its accumulated profits, and on board meeting held on 19th March 2021, as per the provisions, the dividend amount was to be deposited in a separate bank account on or before 24th March. That is the 5-day provision, while the company deposited on 31st March 21 by a delayed period of 7 days. Here, the penalty was levied upon the company of rupees 10,000 plus 1,000 per day, that is 7,000, totaling to 17,000. Similar penalty was levied on 2 directors and also upon the company secretary, totaling to 68,000. Here it is to be noted that the penalty on directors or company secretary are to be paid by them only, and such penalty will not be reimbursed or given by the company. Yes, sir. This is the last slide.
Okay. Now let us
Only
see the
one
yeah.
One
Yes,
minute,
go ahead.
Bala. As a matter of caution, I would like to say that in case of unpaid dividends, though there is a requirement that after 7 years you have to transfer to IEPF, but during the 7 years, it is the responsibility of the company to protect that unpaid dividend is intact. In fact, participants might be aware of that. Prior to COVID, I think a couple of years before the COVID, it has happened with that some R&D agents were misusing that unpaid dividend amounts. Because always it is possible that when the accounts are not moving on dormant accounts, one can always get tempted to take out that funds out of that unpaid dividend account. So it is the responsibility of the company secretary to ensure that unpaid dividend amounts, especially where the amount is huge, to take care of that. In Reliance, what we used to do was that in such cases, we used to put a flag that the R&D agent cannot make any kind of duplicate warrants or something like, or validate those warrants without the permission of the company. So wherever the flags are there, to remove the flag, it needs the company's permission or approval. So we will come to know that there is a genuine case. We used to examine that at the corporate office, and after that, we used to advise the R&D agent that they can release the dividend. So these kind of precautions company secretaries have to take. Yes, Bala.
Yeah. A listed company declared dividend. A shareholders got registered shares in her nickname, say Dolly, whereas her original format name is actually Rita. She has a PAN, Aadhaar, and Demat account, etc. in the name of the Rita. But dividend warrant is actually the name of the Dolly. What she can do, get the dividend of the earlier years. She can furnish KYC in the name of the Rita only, or willing to give the affidavit stating the format name is Rita and Dolly is the same person, or can she get the dividend encashment? What company should not accept her request? She has been only 200 shares in her nickname.
See, I don't know that. In fact, nowadays, whether the shares are in physical mode or in electronic mode, KYC norms are mandatory. Okay, even if it is in physical mode, whether it is the company or the R&D agent has to ensure the KYC norms are complied with. That means you have to submit your PAN card especially. So if the PAN card differs to that, according to me, that is not in conformity of the KYC norms, so the dividend is not to be disbursed. It should be kept in abeyance. And after that, only when the KYC norms are in place, then only the dividend is to be released.
Shareholders have no such right to improve upon the Companies Act. Many profitable companies are to forego payment of the dividend, or rather decide to reinvest the earnings into the business to maximize the profit in long term. I do not know whether it is a
It's
state.
an answer. Answer given, Bala.
Okay. There is no need to transfer the dividend equalized amount to the dividend reserve account anymore. Is the provision is abolished? Somebody is asking.
Yeah, it is not mandatory under the Companies Act 2013. Prior to that, it was mandatory. And up to maximum of 10% of the profits are to be transferred to the reserves, depending upon the amount of dividend percentage, which is not required under the new act. That's why it is obligatory on the company. If it wants, it can. Otherwise, it is not mandated.
Can a certain set of shareholders, particularly belonging to the promoter group, can renounce the dividend due to them in writing?
Yes, shareholder can always advise that dividend is to be paid to somebody else. A mandate is to be given, can be given, but it is not called as a renunciation, like right issue. Because if you see that it is very clearly provided in 123, the dividend is to be paid to the concerned shareholder or to the person to whom he has ordered for. So if there is such an order is there, so and so is to be paid the dividend, it can be paid. Am I correct?
Either no need to transfer the dividend equivalent fund to the dividend. I think this question you answered already. I think so. The transfer of the amount. How dividend to be paid on partly paid up share if the company is having two kinds of share capital?
See, in case of partly paid shares, there are two ways of looking at it. Number one, the call has not been made. Second thing is calls in arrears. If the call has been made and the calls are in arrears, the company can adjust the dividend amount against the calls in arrears. Suppose the company has not made the call and the dividend shares are partly paid shares. In such case, the company has to have two ISINs in the demat mode. One is a partly paid share ISIN and one is a fully paid share ISIN. In such case of the partly paid shares, the dividend will be pro rata basis. While declaring the dividend itself, you have to say on partly paid shares, the dividend will be paid on pro rata basis.
Is amalgamation reserve, which is yeah.
No, I'm just asking Ms. Limbal has anything to add. She can add it anyway.
Yes, sir. No, partly paid, I also was saying the same, that it can be adjusted towards the call. That's what I also had one instance.
Yeah.
is amalgamation reserve, which is part of the free reserve, can be used for distribution of the dividend. Yeah, if it is a free reserve, it can be used. If it is a specific reserve, it cannot be used. That is what it is said actually.
Amalgamation reserve, if it is a free reserve, so
Yeah.
you have to see that and what way it is a free reserve, then only you have to go for that. See, because sometimes it may be, see, any kind of reserves or profits, they should be of the related to the cash. Then only it can be, otherwise not. Say, for example, when you are what's called as an revaluing the assets. So the revaluation reserve is not a free reserve. So it is not a capital reserve also, but it is not a free reserve. So you have to be very careful whether amalgamation reserve falls in the free reserve category or not. Then only you have to go accordingly.
Regarding the penalty.
At the same point of time, since we are on the free reserves issue, let me also clarify one or two things more. In case of capital redemption reserve, if there are preference shares are there, the company is obligated to create a capital redemption reserve from out of which the preference shares will be redeemed. Or sometimes it may so happen the company is not creating a capital redemption reserve that is called as CRR, and the company can make a fresh issue and redeem these existing preference shares. Wherever the CRR is created, out of the CRR, if you have repaid the preference shares, that CRR is no more required. Then it is to be transferred to free reserves and then it can be utilized. So CRR, unless until the preference shares are redeemed, it is a capital reserve that is not to be utilized for the purpose of declaration of dividend. Same is the case with the DRR also, debenture redemption reserve. Any reserve which is created for a specific purpose, that is not a free reserve, and out of that you cannot pay dividend. But once the purpose is served, that reserve is to be transferred to free reserves. After that, you can utilize that for the purpose of declaration of dividend.
Regarding the penalty, why would the director or company secretary bear the penalty from the personal accounts if the company agrees to reimburse?
See,
Law is very clear.
according to me, the company is not supposed to pay that thing. Governance point of view also, because it is the shareholders' money. How can you pay that? You are not supposed to pay that because it is a penalty for the default of the director, non-compliance of the directors, or negligence of the directors, or whatever the reasons it may be, whether it is knowingly or unknowingly, that is immaterial. The moment you are holding a position, you have to take the responsibility. In case of any non-compliance, you have to pay the pocket, out of your pocket only. Nowadays, what happens is sometimes the companies are reimbursing that. So obviously, neither the directors bother nor the company secretary bothers, the recklessness will continue. That is the reason actually the regulatory authorities are also writing that very clearly. It is not to be repaid.
Not only
Earlier
that,
stock exchanges also in one or two cases, it has written the same thing that the compliance officer has to make the penalty and the company is not supposed to reimburse the same.
not only that, Sudhakar, the order itself very clearly says it has to be paid from your own source of the money. And I have cases which I came across. After the money has been paid, the regulator has actually verified whether the money has come from his own personal account. He asked for the details. So that extent, the regulators have actually gone up. Sir, we have the profit for the year 23-24 to the tune of rupees 1 crore and accumulated reserve of 5 crores. Whether we can distribute the dividend to the tune of rupees 6 crores for 23-24.
Technically, answer is yes. You can pay that, but out of the accumulated reserves you are talking about, you will pay dividend out of the reserves only in case of insufficiency of profits, number one. If the profits are in this case, it is not a question of insufficiency of profits. And if there is insufficiency of profits, you have to go as per the reserve rules. The rules very clearly says that after you are utilizing the reserves, it cannot go below 15% of your paid up capital. And you can withdraw only 10% of the paid up capital and free reserves. If it is the amount is lying in the surplus in the P&L account, yes, you can utilize it completely. In case of reserves, you cannot utilize the reserves fully.
Yeah, because the starting point here is whether it is a profit-making company or inadequate is a profit-making company. That test has to be done first. Then only this question can be answered. Because just taking the fact, we cannot answer this question. As you rightly said, yes, if it is a carried over P&L account, it can be utilized. If it is a free reserve, all those conditions is to be checked up. Is share premium available for dividend?
Vedant has mentioned share premium is not a part of free reserves, hence it is not available.
Where the company has converted the preference share capital and the equity share capital already, but the capital redemption was not reversed in the books of the accounts. A transfer of the redemption reserve is for a free reserve to the later year and use the free reserve for accumulate. I think you answered this. Once this purpose is actually served, you can transfer the free reserve, you can use it, that you answer it. Yeah, that is all the questions I have so far. If anybody raise the hands, we can address to them.
I think everyone is clear.
There is only one hand is risen, I think so. Sorry, two hands are risen. I think there is one rush. One Rashmi is there, one Umesh is there. They raise their hands. Yeah, Vedant,
you can.
Vedant, you can close the PPT.
Yeah. And the person who raised the hand, please unmute and.
I think now Rashmi has put on the hand only. Yeah. Now both are there. Umesh and Rashmi. Yes, you can unmute and talk. Umesh and Rashmi, you are there. Please unmute and talk, please. Yes, Umesh.
Sir, I am Umesh, sir. I had just made a query that we have profits for the year of rupees 1 crore and accumulated profits of rupees 5 crore. Sir, you had asked that what type of reserve we have got. We have accumulated the yearly profits which we transfer to general reserve every year. That is over the years have accumulated to rupees 5 crore and it is put in the balance sheet in the head general reserve. So whether we can we can utilize that general reserve of rupees 5 crore along with this 23-24 profit that coming to 6 crore, whether we can declare dividend of that full amount or not.
That is what Sudhakar has actually answered. You cannot utilize the full amount if you are a profit-making company.
Yeah.
Because the money, when you transfer it is okay, but when the money is transferred back, how much you can actually transfer back after the transfer, how much money is to be retained in the reserve account, those are the conditions you have to consider before transferring money. You cannot enter to transfer the 100% money from the free reserve.
What are the limits to that amount which we can transfer, sir, which we can utilize? What are the limits to that amount?
You can withdraw only 10% of paid up capital and free reserves from the free reserves account. And similarly, after withdrawing that, the balance money in the free reserves cannot be less than 15% of your paid up capital. Please refer to the reserve rules before you are utilizing the reserves for declaration of dividend.
Thank you, sir.
Yes, Rashmi, you can speak. Or Praveen.
Yes, I have a question.
Yeah.
When the dividend is declared and it is 100% subsidiary company, Indian company, and the dividend is lying in the dividend account, but through some because of some RBI regulations, there is some restriction there. They want FCGPR regulation and all that. So the delay happens for payment of dividend. So is it covered under that exception that it is prohibited by law and no penal action will be applicable because 30 days are already over after declaration of the final dividend, but RBI is not clear, has not given the go ahead yet. So whether that will be a reasonable cause for a delay and not transferring after 47 days to unpaid dividend, can we keep it still in the dividend account?
See, if you can substantiate it with evidence that it is out of your hands. It is not within your hands to distribute the dividend because there is a regulatory restriction is there. Because of that, if it is so, yes, no doubt you will not be held responsible for that. However, if you are not submitting some documents, you are negligent from your side because of which you haven't got the regulatory clearance, then you will be held responsible for that. So you have to see that where the difficulty is, whether it is your account or RBI account.
No, the
You should
correspondence
be
is
able
going
to
on.
substantiate it.
So no need
That's
to
what I
transfer
told you, Praveen.
on 47 day.
correct.
We need not transfer no 47 day to unpaid dividend. We can keep it in the dividend account no till
See,
it is
that
on.
unpaid dividend account, you have to transfer. Okay, that you cannot stop it because it will be lying in the same bank account only. Only thing is the title of the bank account you are changing from dividend to unpaid dividend account. Question is, you are
Okay.
not paying within 30 days, whether you will be held responsible for that or not. For that, if there is a regulatory restriction is there, you are not able to pay within 30 days, you will not be held responsible if it is not in your hands. So when the dividend is not paid within 30 days, tomorrow ROC may issue a show cause notice to you. That point of time, you have to substantiate the difficulty is not beyond your hands. Then he may agree with you. Otherwise, he may put he may trigger the penal consequences, which are very harsh.
So it can be put that if it is not in your hand and it is not due to your default or any reason you are unable to pay, you are not responsible under the provisions that dividend is not paid within timeline. However, that does not give you immunity for not transferring the dividend after statutory time to unpaid dividend account and IPF.
Even if you transfer the unpaid dividend account, money can be still paid from the unpaid dividend account. So
yeah, that's why
nothing
process need to be.
Yeah, nothing is prohibiting you. You're either renaming the account as an unpaid dividend account or transferring whatever it is. That is not prohibiting you. The question is only the non-payment of the dividend within 30 days is the regulator, as Sudhakar explained, whether it is fault due to you or it is of the restrictions, etc., which is coming from the regulator. That has to be looked into. Yeah.
Then interest at the rate of 12% will be applicable there.
Yeah, if it is your fault, it will be. That is where you have to justify, no, what is it? Where is the fault lying? It is on you or it is on the RBI, whatever it is. That is where it is.
No, but the interest part, the RBI will not allow to repatriate. No, the only dividend part can be under 15 CA, 15 CB. Only interest dividend can be repatriated. No, interest will not be allowed. No.
See, you are regulated by two regulators. One is RBI and one is Ministry of Corporate Affairs. So you have to comply with both. As per the Companies Act, you have to pay the interest to the shareholders. So you have to tell RBI that, look, I am under obligation to pay the interest because of my delay in dividend distribution. Then RBI will allow you to do that if it is as per the law. At the same point of time, please remember that not only the interest, even the 1,000 rupees per day penal provision is there, and also the imprisonment of directors for non-compliances. ROC may trigger those provisions also. That's what I told you, it is very harsh. So you should be able to substantiate that the difficulty in non-payment of dividend is not in your hands. It is because of the regulatory issue. If you are able to substantiate it, it is fine. Otherwise, you will be in difficulty.
Okay.
Yeah.
Thank you.
Questions are answered, right?
Okay.
I think that's all.
No one has raised the hand. I think we can do. Yeah, okay. I think everyone is answered. Everyone is given opportunity of raising the hands and speak. And so in that case, we can now conclude this session on Secretary Standard 3 and dividend. Everybody, thanks a lot for your participation. Thank you, Ms. Dempal, for your time, your inputs, and sharing experience. Thank you, Mr. Sudhakar, Mr. Bala, and all the participants. And Vedant, thanks for the nice presentation. Thanks a lot, everyone.
Thanks a lot,
Thank you.
Vedant,
Now you
for
can
your,
say good night,
Thank you.
Deepti.
thanks a
Now you
lot,
can say good night to me.
thanks a lot,
Yeah.
Vedant, for your nice presentation. You have covered everything.
Thank
Yeah,
you.
we will say good night. You are in the middle of the night. We know that. So good night for you. For rest
Good
of
night,
us,
Thank you.
we
Thank
will
you very
enjoy
much.
our holiday weekend.
Thank you. Thank you, everyone.
Thank you,
Thanks,
Vedant.
everyone.
Nice
Thanks a
meeting
lot
you.
to
you.
everybody.
Thank
Thank
you.
you, sir.
Wish you a
Good
good weekend. Good night.
Thank you, Akshay.
Good night, Sudhakar.
Yeah.